we're becoming very surprised at how quickly the uptake of stablecoins is. So if we had to modify anything in that $1.5 million forecast, you'd probably see and you can see on a table in Big Ideas 2025 how we build up the bull case. We'd probably take a little bit from the emerging market part of that stack, but I think the much bigger force right now is it's the gateway into digital assets for institutional. It's a new asset class that and the really substitute for gold as a store of value, another use case. Those are the two biggest, and those we have not changed at all our opinion on. So I think we can safely say that our bull case is well over $1 million in 5 years.
Bitcoin at $1 million, that's the price target some of the biggest names in finance are still calling for. Michael Saylor has been pounding the table for years, and Cathie Wood of ARK Invest says her conviction hasn't changed. In fact, Wood's latest comments make it clear, even if ARK slightly trims its forecast for Bitcoin's growth in emerging markets, the major drivers behind their bullish thesis are still in place. Bitcoin is becoming the gateway to digital assets for institutions and a replacement for gold as a store of value. Those trends, she says, are why ARK still expects Bitcoin to trade well over $1 million within the next 5 years. We're already seeing that shift in action. Publicly traded companies now collectively hold more than 774,000 BTC, with MicroStrategy leading the charge under Michael Saylor's relentless buying strategy. And it's not just tech companies. Conservative investors are dipping their toes in too. Michigan's state retirement system recently tripled its stake in Bitcoin ETF to over $10 million. Crypto entrepreneur and podcast host Anthony Pompliano even argues that the U.S. government will, in its own way, help push Bitcoin toward the $1 million mark. At the same time, the blockchain landscape keeps evolving. Coinbase has launched Base, its own Layer 2 network built on Ethereum. Robinhood is building one as well. To Wood, this supports ARK's view that Ethereum is set to be the institutional protocol of choice. Solana might be faster, cheaper, and currently popular for consumer-facing apps, but Ethereum's slower, more expensive approach comes with something institutions care about most: greater decentralization and security. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
When people ask me what is the biggest surprise in the last 10 years, so we started ARK in 2014. We wrote our first Bitcoin blog back then. 2015, we wrote our first white paper on Bitcoin. And we thought that Bitcoin in emerging markets would serve the role that stablecoins now are serving. And Tether is just an unbelievable story that way. I just learned from one of the founders of Tether, Paolo, that they had no idea that Tether would become an important source of dollar exposure to emerging markets until COVID, when the children of in families in emerging markets would go to their parents and say, you don't have to go into the black market today to buy dollars. We can do this on the internet. And that's how it really spread, which is fascinating, isn't it? We thought Bitcoin would serve that role because we didn't know about stablecoins. And even very recently, I think we're becoming very surprised at how quickly the uptake of stablecoins is. So if we had to modify anything in that $1.5 million forecast, you'd probably see and you can see on a table in Big Ideas 2025 how we build up the bull case. We'd probably take a little bit from the emerging market part of that stack, but I think the much bigger force right now is it's the gateway into digital assets for institutional. It's a new asset class that and the really substitute for gold as a store of value, another use case. Those are the two biggest, and those we have not changed at all our opinion on. So I think we can safely say that our bull case is well over $1 million well over $1 million in 5 years. Coinbase, for its layer 2 base, chose Ethereum. More recently, we saw Robinhood, for the layer 2 that it is evolving, also building on top of Ethereum. We had a thesis that Ethereum was going to be the institutional protocol. I know that Solana was doing much better. Solana had a massive run relative to Ether. And so many people were challenging that notion, and yet we're seeing the votes being placed. And it makes sense. Ethereum, while it might be higher cost and a little slower, it's more decentralized and therefore more secure. Solana, we think, is probably going to be the winner in more consumer-facing applications. And it was very, very difficult for us to gain a position in our ETFs with good exposure to Ether. There are all kinds of problems when 40 Act funds buy another fund, another ETF to gain exposure. There are tax issues. There are fee issues, fees upon fee issues. There's something called, and this is a tax issue, bad income. If the profits associated with something generating bad income, bad doesn't mean evil at all. It just means it's a tax term. If those profits, gross profits, this is gross, there's no netting here. If those gross profits are more than 10% of the total profits generated in a year of a fund, the entire fund can be shut down. The tax benefit, you'll basically you'll lose a lot of tax benefits, and you'll be subjecting the fund to a great number of fines, if not actual shutting down. So we can't take those risks. And as you can tell, I'm not deep into tax law, and I'm not going to be able to explain exactly who, what, when, where, why, and how. I just listened to our trading team, our compliance team, our finance team, and I say, okay, I can't go there. It's just, I can't do it. So this is the first time we've been able to gain a solid position in Ether. And, sure, it comes at a premium, but what's different from Bitcoin treasuries, like MicroStrategy, now Strategy, is there's just more utility that these Ether treasuries can offer, staking being one of the most important ones. The ETFs, at least not yet, the Ether ETFs are not allowed to stake. Mm-hmm. So, and yes, I think as you know, we were the cornerstone investor in Circle. So we've been watching the stablecoin movement, which is exploding. And of course, again, most of that is happening on Ethereum.
Cathie Wood describes the U.S. economy as stuck in what she calls a rolling recession, a slowdown that's been moving from one sector to another ever since the Fed hiked interest rates 22-fold in just over a year. The first domino was housing, which is still down roughly 35% from its peak and, by some measures, weakening again. Housing inflation, Wood notes, is already softening. And here's the catch. If sellers want to move their properties without the benefit of lower rates, they'll have to cut prices. That could send inflation lower, possibly sharply, later this year. Because housing data flows into official inflation reports with a lag, this downward pressure could stick around for a while. Looking ahead, Wood sees a turning point. She believes that as policy clarity improves on tariffs, taxes, government spending, and regulation, the U.S. could transition from this rolling recession into a stronger-than-expected recovery within 6 to 9 months. One reason for her optimism? Productivity growth. It's already running above 2% year over year, which she finds surprisingly strong. And she expects it to accelerate, driven by the very breakthrough technologies ARK focuses on: robotics, energy storage, artificial intelligence, blockchain, and life sciences. Let's get back to the interview.
With MicroStrategy, yes, that is a bet on Bitcoin. That's obviously the biggest asset in the space. We feel certainly that Coinbase is is powered importantly by Bitcoin, because where Bitcoin goes, others follow. So we felt that we had a good broad-based holding there. And as I said, Bitmine Immersions is not in the top 10, but we do think it's important now that Ether is showing up as an institutional preference, that it's important for us to be there. Well, I think it was interesting in the Fed vote today, there were two dissents, and we have not had two dissents since 1993. And I remember those because I was in the business back then as well. And I think that's very important symbolically, because Chairman Powell has wanted unanimity. And so now we've had a break. And part of it is because Chairman Powell's term is up in May of next year. And maybe the two governors dissenting want a shot at that position. You never know. You never know. But maybe it is because the two governors, and I haven't gone through all of the notes yet, the two governors are seeing evidence of housing relapsing here, and prices in many areas not responding to tariff increases, and seeing that, well, wait a minute, maybe the surprise here in the next 6 months is going to be much lower inflation. And we've had a few employment reports that they have something for everyone, some strength, some weakness. But I think what's beginning to concern a lot of people is that the unemployment rate for new college graduates is going up. And that's because entry-level positions are being subsumed in many cases by automation, especially AI. And so I think they're looking at this as a potential concern out there. We have been saying for quite some time that the economy has been in a rolling recession. When the Fed jacked rates up I think it's 22-fold in little more than a year's time, one sector after another began to give way, starting with housing. Housing, by many measures, is down 35% still from the peak. And we're seeing some metrics take another step function down. So I think that has some people concerned. I think the housing inflation numbers are going to come down. They're already, the monthly numbers that we get from various sources are showing declines. Year over year, they're not declining, except for maybe median existing home sales. But we do think that one of the solutions to the affordability crisis, if sellers really want their homes to move, they're going to cut their prices. And because that is if interest rates don't come down. And if they do cut prices, then the big surprise in the latter part of this year is how low inflation is going to go. And there's a big lag between the time home prices fall and they get into the statistics and leave the statistics as well. So this is going to be with us for quite some time. So I think we've been saying we believe that thanks to certainty now, more certainty about tariffs, tax policy, government spending, and regulation or deregulation, that we're getting ready to move from this rolling recession into a much stronger than expected recovery. In the next, I'll say 6 to 9 months, it will become obvious. With productivity, one of the biggest surprises, it's already strong given the slow growth rates in the economy. I think year over year, it's still up above 2%. But we think it's going much higher thanks to all of the technologies around which we have centered our research. So robotics, energy storage, AI, very importantly, blockchain technology, obviously important here, and what we call multi-omic sequencing in the life science space. All of those innovations are incredibly deflationary. And the best example probably is AI. AI training costs are dropping 75% per year. AI inference costs, so the cost to get an answer as we're typing into ChatGPT or Grok, my preferred right now is Grok. Those costs are dropping anywhere from 85 to, in China, we've gotten a statistic, 98% per year. So when you cut the cost of something, you get a lot more of it. So we think this is good deflation. This is not deflation like 08, 09. That was very bad deflation. This is good deflation for those companies that are on the forefront of these new technologies. It might be bad deflation for companies that are going to be disrupted. And if they're being disrupted, they'll be forced into cutting prices as well. So we think we're going into a much more deflationary world than I think many economists and strategists would suggest.
Rising institutional adoption, accelerating technological innovation, and shifting macroeconomic conditions are converging to create an environment where digital assets could see unprecedented valuations and broader integration into global markets. Meanwhile, economic dynamics suggest that current headwinds may give way to renewed growth, potentially amplifying investment flows into both traditional and emerging asset classes. What potential economic or technological shifts could most influence the pace at which alternative assets become mainstream in global portfolios? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.